enterprise Bitcoin solutions, treasury, custody, and corporate infrastructure. We have here a few short bios. Jeremy Winkler is the growth and operations lead for Europe at Blockstream. Jeremy, if you want to come up and take your seat under your name. Yes, we've got it right. Gerry Afentakis is the managing director at Zodia Custody Europe. On you come. Peter Stolcz is director of B2B sales at Amina Bank. And finally, Scott Ellam is the founder and managing director at Spencer Riley. Enjoy the panel, guys. Thank you.
Okay, gentlemen, let's get started. Maybe to start things off, Scott, could you tell us what prompted you and your company to consider adding Bitcoin to the balance sheet?
I mean, that's a long story. So set the business up 2014, and before setting the business up, I was quite intuitively aware of the issues of currency debasement, albeit as a youngster I might not have described it like that. But as you're building the business and you're taking on responsibility for staff and their wages, and the more responsibility you have with the business, the more you're looking into the future and preparing for the future. So you start to build, as most people do. And this is a service business, executive recruitment, headhunting business. So the staff wages, looking forward, you're thinking, right, you want to build a cash reserve and a cash buffer to make sure that should there be an economic shock or should there be a downturn in a market, that you have the safety within the business to continue meeting those liabilities and making sure that people who are working in the business, mortgages and kids and everybody can still receive their payments every month. So you're building a cash reserve, but as you're doing that, you're just watching the cash reserve devalue year on year on year. And a lot of service businesses don't have assets on the balance sheet. So you sometimes see companies invest in commercial property and then lease the property back to the business, or the property's owned by their pension fund. But physical commercial property for me was just too stuck and illiquid and inaccessible. So I'm looking for a solution, and as we're coming towards 2016 to 2020 was my personal Bitcoin journey. And by the time we got to 2020, I had my thesis together, and you go through, okay, it's the first time in human history there's a finite asset, first time that there's an asset that can't be confiscated, first time that there's one that can be sent anywhere in the world. The price is going to go up over time. But then when we reached 2020, I'd moved the business into Leeds city centre, which is a bit of an epicenter for our industry, and there's a lot of talent there within that city that operate internationally, competing with us. Just funnily enough, if we're looking for, or if we're speaking to a client in the USA, quite often it's a company that's on the same street that's competing with us. So we've moved in with an idea of, right, I set the scalable platform for growth, and my personal balance sheet is very simple. I buy Bitcoin. And the business balance sheet is, you're looking at it and you're thinking your cash reserves dwindling in value. 2020, we move in a week before COVID, and that economic shock happened. And you think, right, okay, business is in a good position because we've just moved into a new office, which means we've agreed 12 months free rent. So I'm thinking this is actually an opportunity for us. But you've still got that issue of what do you do with the cash on the balance sheet. And then 2020, I think Michael Saylor announced that they'd bought Bitcoin as a balance sheet asset on a public company. So feeling a little bit silly, the answer was staring me in the face, that for our cash reserve and to preserve our cash reserve and actually give the business, and I believe this is applicable to all businesses, to give the business a chance to last forever, there's now a solution which is put Bitcoin on the balance sheet. So it was October 2021, we committed to, or I committed, if you like, to having Bitcoin as our primary reserve asset. But as you can imagine, it's just a little bit more complicated than that in the UK. So the management accountants have a conversation with them. They're reporting to me, so the decision's been made. And there's a couple of people know within the business. But 2021 in the UK, you weren't quite sure what the regulatory environment was going to look like in 2022, 23, 24 from a Bitcoin perspective. So you kind of had to instinctively make the decisions that you believe were right for the business long term and for the staff long term, and that's buy and hold Bitcoin. And from a regulatory point of view, that's account for it as an intangible asset. Let's not disclose publicly that this is our primary reserve asset at this stage until the regulators catch up and understand that this is an ethical, sound money that can allow businesses to build a platform on the turn their balance sheet from a liability to an asset.
Okay, interesting. So the secret balance sheet of Bitcoin, basically.
Well, yeah, there's that aspect, and then if we're on institutional custody, there's also a personal security.
Okay, and maybe just as a quick follow-up question there, like, what were some of like the biggest misconceptions that you have had to overcome internally when you made the decision to put Bitcoin on the balance sheet?
That continuing a daily buy of Bitcoin throughout 2021 and 22 was a good idea. That was probably a challenging conversation to have. But internally, there's a team in the business who I have a responsibility to make the right decision on behalf of long term. But the right decision I believed in 2021 was to start building that balance sheet and not discuss it with every member of staff in the business, because what I didn't want to happen was to cause them stress. And when the price, we had an 80% drawdown, where if you're working for the company and the CEO's buying Bitcoin throughout an 80% drawdown, if you're not a Bitcoiner, that might be a stressful position to be in. So the challenge of communicating our Bitcoin balance sheet was with the stakeholders who needed to know initially, but then education over the last 3 years. So I've had very good excuses to have the conversation with staff. We've got a team that you could probably say is made up of people who are, there's some people who would be greyer and older than me in the business, but there's quite a lot of people who are at the early stages in their careers in our industry. And because it's low basic salaries, high commission, sometimes if they've made a placement and they've got a bonus, the conversation would come about where they would say, what can I do to invest my bonus? I can't quite afford a deposit for a house from what I've earned this month, but this is a significant sum for me, and there's a surplus. And I'm not qualified to give financial advice, but I use the opportunity every time to say, okay, why don't we have a conversation about assets and investing? I can't give you any financial advice, so who wants to come? Everybody wants to attend, and it's history of money, right back through the ages, finishing on asset classes, gold, S&P, Bitcoin, and the performance of those from the peak in 2021 right down to, I think, when I did that presentation, Bitcoin was at 33,000. So you're slowly warming everybody up in the business to the idea of Bitcoin. And then the way I communicated it to everyone from a balance sheet perspective was in retrospect. So doing a presentation and then kind of saying, you all know I'm a Bitcoiner. Had we done this 4 years ago and bought throughout this period, this would be the result. So thinking ahead, how many of you believe that would be a good idea and something that you'd like to see the business do going into the future? Everyone says yes, obviously. And I got to sort of say, well, okay, I've already done it for you. Here's what we've got on the balance sheet. Here's what we're planning to do going into the future. And at the time, it was kind of let me think about how we ensure that this is beneficial to you going forward, which I believe we've now found with the upcoming plans to IPO as not Spencer Riley, Daniel. That is our operating business now, flagship operating business, but we'll be IPOing under ticker XCE Connected Excellence Group. So that was the journey.
Oh, okay, and then maybe for Peter and Gerry, what kind of products or frameworks are you guys developing to support people like Scott in their treasury journey?
Yeah, that's a very good question. So, for example, I mean, I take on the banking lenses, I would say, and for the enterprise perspective in the end. And I think that's what's very crucial at a start, I think, is to have a proper custody infrastructure, for example, especially when we are talking about enterprise Bitcoin. This becomes extremely crucial that we get this right. I mean, as we go to talk about institutional adoption and enterprise adoption, it's not enough to deal with the classic custody infra, I would say, but for example, deep cold storage, so to say, so an additional layer even underneath cold storage. I think it's a super crucial aspect that many ignore, that needs to be taken into consideration when you want to make sure that this custody is actually done properly and the assets and the reserves are safe. And even if you're talking about security, I think where one needs to start is not even at a technical level, but more on the regulatory side, right? So the most important question that we need to ask ourselves, how does the regulatory aspect looks like? Are those assets off balance sheet, for example, when we are talking about centralized custody, right? The bankruptcy remoteness of it, right? Traceability, auditability of the assets from an institutional angle is extremely crucial, I think. And for example, from a banking perspective, this is, I think, I would say, the most important baseline. On the other hand, I mean, there is a flip side of it for liquidity, regulated liquidity. I think it's also another big thing when you are acquiring Bitcoin at an enterprise scale, right? Then to do it right and to source from providers that are, I would say, properly regulated is also extremely important, right? So it is becoming increasingly important for the institutionalization to make sure that you are actually getting those assets from the right sources. And then, of course, there comes the kind of the additional, more abstract layer to it. For example, developing proper risk management strategies, right? Hedging strategies. And these things are something that corporates and enterprises cannot always provide themselves. So they rely on third-party providers. They rely on others that already have these things in place. And of course, I would say deep down, there are, of course, other more sophisticated solutions. For example, I would say even options, structured products, and other different means of hedging exposure that one kind of needs to look into at the end, right? So I would say these are just some aspects in general terms, I would say. Yeah.
Hi. So maybe just quickly for context, I'm Gerry. I work for Zodia Custody, which is a pure play digital asset custodian owned and used by Standard Chartered Bank, Northern Trust, National Australia Bank, Emirates NDB. So a nice selection of global tier 1 and tier 2 TradFi financial institutions. So to answer the question, when we look at the market, what we see is institutions such as Scott's and others, many of whom are in this room, who look for two things. Number one, they want institutional robustness around the security of their digital asset holdings, right? When you look at building any business, whether it's an asset management business, whether it's a treasury company, the key is keeping assets safe and having confidence that from a regulatory and from an InfoSec perspective, that's the case. So that's objective number one, and it's a wonderful thing to be able to achieve. However, as Peter was saying, it's on its own not enough. What comes as a second step, and equally quickly, are people wishing to generate yield or do certain things with the holdings that they have. And herein lies a little bit the strategic, not dilemma, but the strategic optionality that custodians ask themselves is, shall we do these processes in-house, or shall we outsource them to a best-in-class third party who can help us generate yield for our clients, help us do various other things? So from a Zodia perspective, the way that we've envisioned our role in the ecosystem is just to be the best at one thing. We're going to ensure to our clients that from a security point of view and from a regulatory point of view, we are the gold standard. However, we do need to provide these services, and the way that we go about doing that is, the easiest metaphor is to imagine an app store. So we have an internal app store which we populate with best-in-class service providers from across the industry, which means essentially that almost anybody in the industry can become a Zodia partner. And we allow our clients to, in the most frictionless way possible, consume any of those third-party services from within the Zodia platform. So yield, trading, off-exchange trading, whatever it is and wherever you lie on the spectrum, your ability to do that from within Zodia is assured. And I think when we wrap that with, again, the regulatory position that we have and the fact that we're owned and used by these global financial institutions, it constitutes a relatively potent value proposition.
Okay, so it's security first, but quickly after security, it's how to generate the yield on the Bitcoin. And maybe as a question back to Scott, are you considering the yield generation for your own balance sheet? Is that something that you get asked for? Is that something that you're looking for?
It's a question I've been asked quite a few times, yes. We're at the stage where we're very close to putting out our public intention to float and our admission document and details. So I'm a little bit in a position where anything I say, I have to have a conversation with the lawyers, and anything I say has to start with the term "I believe" at the moment. But from a yield point of view, increasing Bitcoin per share is our focus as a business, and that's through two simple methods, or three simple methods, if you like. Capital raising when it's accretive to shareholders, and attracting talent to the operating business to increase operating cash flows to buy more Bitcoin. We're not thinking any more complex than that at the moment, other than potentially considering some Bitcoin-denominated tools for convertible bonds, etc. May be I believe, may be something we would consider. So yeah, we're not interested in leaving our Bitcoin anywhere that somebody's going to do anything with the Bitcoin. And when we went into this process, having ran the business as a private company, the security setup was very different than it is today, as we're about to move into being a public company. So we partnered with, and I think trust is extremely important in the industry. I know people probably don't like to hear that, but from an institutional point of view, you need to trust that the institutions you're working with have robust, high degrees of security, but also compliance and also audit capabilities. And we partnered with Cartwright's Advisory Trust. Is that the right terminology there, Sam? Partnered with Cartwright's, who probably the most well-known institutional allocator in the UK at the time. So partnered with them to carry out the due diligence and ensure that we have the right levels of robust governance. And we came to the end of the process and concluded that we would start with access to 2 institutional custodians, looking at, I suppose, the assets under management, looking at the businesses behind them, Standard Chartered, for example. And I suppose our setups changed throughout that process, but it started with hold the Bitcoin, and it's ended with hold the Bitcoin.
Okay, but as a recap there, maybe what you described is from a private company moving over to like a more public setup, a reintroduction of trust as kind of like a core feature of your Bitcoin treasury. that's interesting. Maybe for the panel, what are some of the non-negotiables of a secure enterprise Bitcoin custody solution? Might it be multi-sig key management and all of these things?
So maybe I can take that. So from my perspective, I would kind of come back to this dichotomy or this kind of differentiation between what do we mean by security? I think we can mean two major aspects. One is regulatory and legal security. In the end, having assets off balance sheet, having them bankruptcy remote, and in the end, having the proper regulatory compliance controls over those assets, if we are talking about centralized custody, for example, and at the same time, having the technical aspects done right. And I think for the regulatory aspect, I think it's getting a little bit more self-evident because there are licenses being introduced in all jurisdictions, for example, in Europe, MiCA, and so on, that are kind of introducing those frameworks that are making sure that players are becoming compliant and ensuring certain standards. On the other hand, from a technical point of view, I think there are two aspects worth mentioning. One is that players, especially for all aspects of custody, need to develop multiple points of failure, right? So it's a single point of failure is a very kind of vulnerable position to be in for a custodian. So if you don't have a resilient infrastructure relying on, for example, not just HSM, but also, for example, multi-sig and combining different types of custody infra, then I think you are kind of in a way falling behind. And on the other hand, right, operational resilience should show in all aspects of the organization. So it, across, for example, operational processes, how do you set up roles, how do you set yourself up for a future audit? These are all important aspects that you need to make sure that you have there if you want to ensure that the whole operation is secure, I think, from generally speaking and in a nutshell.
I completely agree with you, Peter, and coming back to the question that Scott was answering, each treasury company will have a different strategy. Some is just to acquire, some is to acquire and generate yield in different ways. And so when we look at the world, I think both of us, Peter and I, what we try to do is provide the maximum amount of optionality to our clients that they can curate for themselves the risk profile and the type of yield that they want in order to ultimately speak loudest to the message that they're trying to put into the market. And so from that perspective, back to Jeremy's question, how is that done? We can do borrow lend through centralized, through decentralized channels. We provide access for market neutral quantitative hedge fund strategies to trade on your behalf, in wallets that belong to our clients with the assets, with the BTC underlying, never leaving the custody account, being mirrored onto a centralized exchange, generating a yield in BTC. And so in providing kind of this spectrum and this menu of ways in which to generate yield, if you will, or return on your underlying BTC, we ultimately try to give clients the maximum optionality with which to build their businesses.
Okay, and then maybe looking into the future a little bit, what would you say, where's this journey going, and what's the next generation of enterprise Bitcoin solution look like? Or Scott, maybe what do you want to see basically from the people?
What are my requests from Gerry?
For example.
Yeah. I just on the last question you asked about the non-negotiables, I come at that from a different angle because I'm a customer, if you like. And the non-negotiable, I think Cartwrights will remember these conversations. Right at the start, my non-negotiable was segregated wallet, proof of funds, whether that is publicly available proof of funds or not is a discussion to have in the future. But being able to see, right, okay, there it is on chain was extremely important to me. And I think that just goes back to first principles of get the basics right, first and foremost. But the additional elements that Gerry's discussed there, what would I like to see? I think I would just like to see I'd like to see Bitcoin adoption grow. So it's the how do we make it easier to educate and integrate Bitcoin, and whether there's any plans in place that make the journey a lot easier for a private business or a public business to understand it and take the first steps. I think if a private company or a public company wants to start understanding Bitcoin, the first thing they need to do is be able to buy it. And there's quite a big barrier to doing that. So however you can make that easier, Gerry, then there'll be more companies looking for chief Bitcoin officers, and our revenues will go up.
And then maybe giving that to you, do you see any problems in that enterprise setup that still needs to be solving? Any kind of like issues that you're working on currently that you want to overcome to streamline this whole process more?
Yeah, I think so. One of the main aspects of it, I think, is some sort of interconnectedness. So when you're looking at treasuries, right, adopting Bitcoin, you can handle, most of them can handle very easily securities and typical kind of hedging assets, right, on how to actually book them, how it actually goes through the accounting system of the company, right? Bitcoin is not at the stage of being handled with the same ease as traditional asset classes. So I think and this is where kind of other players, infrastructure players such as banks come in, where they can help you on actually how to take over some of those processes, or you can outsource to them some of the processes, and helps enterprises in the end to patch up their setup for the time being, while let's say ERP systems can then take Bitcoin totally and handle it throughout the flow. So that's one aspect of it. I think the other one is, and I think probably the biggest opportunity is the technical aspect. So we should not forget that there are multiple solutions being developed today on Bitcoin that probably will make it even more easy to kind of try to handle it in an enterprise setup. For example, smart contracts being developed on Bitcoin and many other different technologies on top of it, right? That might be available for other cryptos, but on Bitcoin it would make it even more robust from an enterprise point of view.
Maybe just to like shed some light in what the trends that we've been seeing, at least for the last 12 months. Being in the industry, we often forget that, you know, we think that the world revolves around digital assets, and it turns out that it doesn't really, especially for those who are outside of the asset class. Where we see quite a lot of activity is traditional financial institutions with big distribution capabilities, realizing that their client base does now have an appetite for the asset class, for potentially Bitcoin as a store of value, as an investable long-term, investment, and building out white label ways for their clients and their distribution network to be able to buy and to hold this. And so Zodia, for example, becomes the wallet provider. A different third party will become the execution agent, and the banks are able to harness, you know, their client base while charging them 100 to 200 basis points per transaction, both in and out, for essentially what amounts to nothing more than a ledger entry, and therefore really add a substantial new revenue line as well.
And then maybe for the people in the audience with the companies who haven't yet taken the first step to kind of put Bitcoin on the balance sheet, what would be the key advice that you would give people that think about starting on that journey?
Do you want me to go? I think there's different types of businesses, and it's a larger leap if there's multiple decision makers. And I know businesses where there are 50% shareholders, and one's a Bitcoin maxi and one isn't, and they're making a smaller allocation than what they would be making if it was just the Bitcoin maxi running that business. So I think regardless of how many people, it's an equation of what's the education level on Bitcoin within the decision makers or across the decision makers, what's the conviction levels across those decision makers, and the result of that equals allocation or suitable allocation. So my advice would be to ensure you have the pipes in place to be able to start allocating to Bitcoin, and then start allocating to Bitcoin at a level that makes everybody comfortable if there are multi-parties making that decision. And I suppose it's quite commonly known within the retail Bitcoin market that a DCA buy and hold strategy over 4 years is the most suitable or secure way of investing in Bitcoin. So start small and start that, because until you get off zero, nothing happens. And I know a lot of people who spoke for a long time about allocating to Bitcoin, either personally or through the business, and not made that first action to put the pipes in place and start doing it. So the advice would be get off zero today.
Okay, we slowly coming up on time here. Maybe as a closer, what would you say is the biggest opportunity and the biggest barrier for like the enterprise Bitcoins, quote unquote?
Yeah, so from my perspective, I would say that it's probably the same thing, right? So regulation is probably inevitable. It is, as it was said in the previous panel, is generating essentially regulatory moats, right? So whoever is not entering, and this is becoming a relatively scarce market right now, is essentially putting themselves into a pretty difficult situation. And in the end, I think this is probably the biggest barrier to enter at the moment, not just financially, but also from a perspective of how to companies organize themselves. But it also gives you an advantage, an edge, in the end, once you are in there and you are regulated and you have the necessary processes set up. So I would say probably that's from my perspective.
The thing I see the most is corporates or enterprises struggling with the idea, shall we outsource key management or should we hold the keys ourselves? And what tends to happen is they ask themselves that question for such a long period of time that the market has changed 3 times in the meantime, and they still haven't gotten any closer to an answer. So the way that we kind of try to socialize the answer to that idea is you can do both. You can work with a third-party regulated custody provider, such as Amina Bank, such as Zodia Custody, with whom you can have a turnkey solution almost instantly, while simultaneously building your own key management infrastructure in-house, and therefore benefit from the best of both worlds.
Yes, and I suppose I'm sometimes having this conversation from the smaller business side rather than the large institutions, which will move slower. And that barrier becomes bigger the larger the business or corporation that's looking to adopt Bitcoin, and the regulatory aspects become a more challenging hurdle, depending on whether it's a private business owned by one individual or a public company with a number of shareholders and stakeholders involved. But that is the opportunity. So the barrier to adoption is the opportunity for the people who can do the work now and start now. And when you mentioned keys there, Gerry, when we started buying Bitcoin, it was quite simple, and it was a safety deposit box setup, much the same as it would be for an individual, and then it quickly progressed into multi-sig, multi-jurisdiction, safety deposit boxes, retinal scanners, fingerprints. And then as we move into a public business, you've seen that challenge that you say from a regulatory, from a compliance, from an audit perspective, just wanting to set best in class takes a lot more work and a lot more due diligence. So, so I think the proof of work is the result there. We've ended up with, we've got quorums of keys across the business and the board, and quorums of keys across partners, Cartwrights, and then obviously the institutional custodian as well. So other than the fact that most of us are in the same room right now, there's very little security risk for a kidnapping event, and I think that's something that people who are not familiar with Bitcoin don't think about and don't grasp, and sometimes think you're joking when you're talking to lawyers and auditors that are not familiar with the space. How important not just the security of the asset is, but how important it is to communicate that effectively and de-risk personal security for people as well.
Okay, we're almost 5 minutes over time, so thank you, everyone, for that panel.